Bitcoin and ETH lose key levels. Where do we go from here? That's the question on everybody's mind for sure. Hey guys, it's Keith Allen. Hey, a little late today, better late than never. So happy to be here. Been doing double duty here this week with the missus out of town on business. But hey, some really significant price changes here in the past 24 hours or so. So we're going to climb right into the charts and see if we can make sense of what's going on. So let's go ahead and get into it. Before we do, though, real quick, if you like these streams, please do me a favor and smash all the stinking buttons. Help me out, right? Share a comment too. I absolutely love the comments. Appreciate the support and the feedback. By the way, comments are open in the live stream. So if you want to chime in, by all means, please feel free to do so. Make sure you hit that subscribe button up there, because that will ensure that you never miss any of my future streams. We're back to doing them pretty regularly here. So let's figure it out, right? So, obviously we had the ETH ETF launch on Tuesday, rather. That was a big deal. But in a word, the second day of the ETH ETF flows were, disappointing. But the pullback we're seeing isn't really limited just to ETH. It appears to be related to a broader situation, broader correction, including TradFi, who took some lumps. I think yesterday was their worst day since 2022. And that seems to be kind of a combination of earnings and maybe some money rolling from the mega large caps, the Mag 7, into some smaller cap equities. And we may be seeing something similar here on the crypto side. We'll see. ETH really took a hit yesterday, but so did Bitcoin. And so we're going to look at what those pullbacks look like, what those corrections look like, and we're going to look at some new targets, because, well, not really some new targets, but revisit some targets and revisit the charts to see where things could go if things break down. I think this is an important time to identify potential buy targets and invalidations. So that's precisely what we're going to do in this Bitcoin and ETH analysis. Let's start over on the ETH ETF situation, because day one, impressive, lots of volume for sure. And we also had positive flows for the day. So let's get into the charts here. We'll come back to fire charts here in a minute, but first let's look at these ETF flows. And so day one, right, we had BlackRock 266 million and Grayscale. These are the two biggest players, obviously. Grayscale 484 million in outflows out of their ETHE trust. That was the legacy trust that they had. They've had it, I think, since about for a long time, almost a decade. High fees here, 2.5%, just like we had with the GBTC, their Bitcoin component. And that we know now triggered a lot of redemptions here. People trying to escape these fees. But this year, or for the ETH launch, rather, they created a new product, the ETH Mini Trust. Lowest fees in the business, right? So they have both the highest and the lowest fees in the industry right now, 0.15% on this ETH Mini. Day one, not super impressed with 15 million, but yesterday they tripled that. So that's interesting. And also interesting to note that the outflows tapered back a little bit. Still significant amount. 2 days, certainly not long enough to define a trend, but we'll be watching to see if this continues to taper off over time. Meanwhile, on the BlackRock side, I really, the BlackRock numbers come in last every day, and I really expected to see them come in with a big number that was going to keep things in the positive. That was not the case. This is like, less than 10% of what they did on day one, closer to 6% of what they did on day one. So it was a net negative. 133 million in outflows was the net. Looking at the other players in the game, Fidelity, pretty consistent day one and day two. Bitwise, big day on day one, little more than 10% on day two. of what they did on day one. 21 shares was flat on day two. Van Eck nearly tripled what they did, and Invesco a little less than half. So you can see kind of the dynamic here. Going to be interesting to see what happens today, because obviously a big dip to buy. But is this the biggest dip we're going to get? Are they looking for more? Are they going to start buying their way in, scaling in at these price levels? Hey, great to see you, Wakas, again. Always appreciate the support. And again, anybody else watching, if you want to chime in to the chat, if you have questions or want me to take a look at something, by all means, or have some input. I'd love to hear it. So while we're over here on the flows, let's take a peek at BTC flows on yesterday. Net positive. Interestingly, the first day, I said I felt like we were going to see some money rotate from Bitcoin into ETH, and that may be precisely what happened here on day one of the ETH offering. And yesterday, despite the dipping, BlackRock was still buying. Most of the others were flat. A little bit of outflow from Grayscale here. So let's see what this looks like in terms of charts, because the real concern to me, ETH lost about 10% in the past 2 days, right? But more concerning than this, and let's make sure my numbers are right. I think it was about 10%. More concerning than this, now it's even deeper. More concerning than this, than the drawdown, is the key levels that were lost here, right? So, we had made it above this 50-day moving average, which incidentally, it's still death crossed with the 21. We made it. We fell through the 50-day, fell through the 100, and then fell through the 21 and the 200. This is not good. And of course, the 0.618 fib also up there. This is not good. We've just lost all four of the key moving averages and the 618 fib. So this could really get nasty, in my opinion. On the weekly, this also, we saw this developing early, the loss of the 21 week moving average, and of course it led to these others. So what could potentially happen from here? As you can see, we do have quite a bit of history down here at this 0.5 fib level. So that is something that is good to see. We could potentially go there. There is some support kind of in this local area right here. In fact, let me see if I have that chart up. Do I have that? This is not being shared right now. Let me see if I can share this item with you. I have an ETH chart, something we've been working on over at Material Indicators. And let's see. Okay. That works, I think. So this is areas. It looks very similar to Fire Charts. It's built in the same web app, and this is beta. We're just kind of tinkering around, but we're getting some pretty interesting data out of this. These are prior support levels, weekly, monthly, quarterly, etc. And you see, we did bounce from support here. There is some secondary support just above the 3K level. But if we lose that, then we end up back down here. Potentially in this range or even lower, right? And so to see what that looks like in terms of the charts, I want to show you where we have all this history, as I was mentioning, around that around that 0.5 fib level. So this would be a target that I would be looking at potentially if we don't see a recovery here. What I really want to see is a recovery. First reclaiming the 200 and work our way back up. I'm fine with that grind. But if it doesn't materialize, and right now we're not seeing a lot of strength that gives me confidence that it will, I'd be looking down into this level right here. Again, you see all of the history we've had. RS flipping this all the way back in February, and then staying above it on every single retest, right? So we're looking to do that once again. If not, then things could get scarier, right? So the question here is is this going to be, is what we're seeing more indicative of what happened after the Bitcoin ETF launch, where there was a pretty significant pullback. Let's see what and it actually is the same on ETH as it was on Bitcoin, despite the fact that it was Bitcoin's ETF. It took the whole market with it. That was around January 10th, I think, right? Or 11th, I mean, is when that was greenlit. So we peaked here. That's February. Okay, so up here, right? So here's where things peaked. We had a pullback of about 20%, right? Had 20% move to the downside. And then what did we get after that? We got a sweet 88% to the upside. Now, I'm not suggesting that we're going to see the same numbers. I'm not suggesting we're going to necessarily see the same 20% down and the same 88% up. But what I am hinting at is the potential for, significant drawdown followed by a nice recovery. That's kind of the pattern that I think a lot of people might be anticipating with this ETF, if it does indeed resemble what happened with Bitcoin. I don't expect it to be the same volume or potentially even the same velocity, but a recovery is expected at some point. The question is, how far do we go before we get there? And alternatively, the other scenario, and one that nobody really wants to see right now, is if this resembles the 2021 top, because that is a different set of circumstances, right? If we're looking at something like this, well, then that would be a sign that that the end is near. So this isn't what we want to see, right? This is not what we want to see developing. There's a chance that it is, but I think it's unlikely. You can see, we peaked, we distributed, and we came back on a distribution rally this time. But the second distribution rally for us was for the all-time high. So I mean, we could conceivably, if it is painting something like this, we could conceivably be right about here right now. So that's something to consider as well. What will determine that is where this recovery comes from, right? If we do indeed recover from here, or we bounce from this 0.5 fib, then that would be reestablishing some strength here, and of course we'd have to retest and reclaim these levels that we lost. That's what I'm watching for on the ETH side of things. Now let's switch over to Bitcoin. Bitcoin did also lose the 21-week moving average, and I posted that the other day when it was like right when it was occurring. And the good news is Bitcoin has so far managed to hold on to some of these other levels. We did get down briefly and wick below the 50-day. So that potentially could mean more downside, but these moving averages are still in a good range as far as I'm concerned. I wouldn't have a problem with testing this. If we lose this 200, that gets a little bit, that makes things a little bit hairier. However, we're also still well within the range. Where things get interesting is the CME gap, right? Which is actually below this 60K level. It's below the 200-day moving average. Let's see if it's near something else. Let's actually see where the CME gap is. Do I have that open? I don't. Let's go ahead and create it someplace. We'll go here. Yeah, this is ugly. ETH BTC chart. That's quite disgusting. Let's look at that CME gap and see where that is. I don't know why I don't remember this off the top of my head. It's not like I haven't looked at it 5 times already. Here it is. There we go. Gap to fill down here, and that goes to the 57.8 level, right? So that still keeps us within this range of historical significance, right? That dates back all the way to the 2021 top. Similar situation here, right? What if we got this going on? That could potentially be happening. I don't think that's where we are at this stage. just because of all the other macro fundamental things impacting the market for your cycle, et cetera, post halving, et cetera. So I think that this is more akin to what we saw around the introduction of the Bitcoin ETFs, and similar deal here, right? Really identical to what I just showed you on the ETH chart is what we had on the Bitcoin chart, right? We had, I'm looking at the wrong year. That'd be helpful if I went to the right year, right? We had a pullback of about 20%, and then it was off to the races. So, and the same 88% to the upside. So that is potentially what we see happening here. We'll just have to wait and see how things continue to develop. But I'm watching these levels here, and if we do, if we filled the CME gap, what I said, that was around 58-ish, right, in this range. I'm okay with that. I'd like to see a pretty quick recovery of these key levels, but staying in this range is not a problem for me. An extended time in this range is not a problem for me. In fact, it's something that I expected. Now, in terms of this handle being developed on the cup and handle, and gosh, do I have to show you the whole structure again? You can see cup, built here. I could show you what that looks like, but I don't think I need to waste time. You've seen it plenty of times so far, right? So if this is developing as the handle on the cup and handle structure, we need to see volume continue to increase, and it eventually needs to find its way to a new all-time high. I'm fine with it taking longer to do that. If we want to see that happen sooner than later, then we would want to see a higher low here. We would not want to see a lower low printed. If we do get into a lower low situation, this structure could still be valid. It could go 2/3 deep and still be valid. And, then we start getting into the macro trend line. Since we bottomed out after the FTX crash, that could bring this 50 to 52 range in play. And of course, probably more significantly, this 40 to 45K range, which does indeed have confluence with this trend line. So these are the things that I'm watching. You lose this trend line, then we're done as far as I'm concerned, unless I see something brand new developing. But that would be a concern. Now, getting to this trend line, talk about a dip to buy. In my opinion, that would just be phenomenal. I've actually been calling for this level, a retest of these levels here at 40, at this 40 to 45K range since we left it back in February. We just never got a retest here. We never got a retest. We never got a retest on any of them. And so I think this 30K range is extremely far-fetched at this point. I think that 40 is a low probability, but still within the realm of possibilities, especially when you look at the trend line here and you look at kind of the timing. If it took us a little while to work our way down here, we could potentially be, if it took this long, if it took until October, we could be in this 50 to 52 range. If it happened quickly, if it happened sooner, then we could be down here in this 44, 45K range, right? So this is what I'm watching to see how things develop. If we lose this trend line, that is not something you want to see. If we lose this trend line, that means that we've topped. Again, I think that's a low probability. And the fact that we're still above these key moving averages is a good thing. CME gaps don't have to get filled, but they like to get filled. And if that one does get filled, it's still right here in a pretty comfortable zone as far as I'm concerned. It's those deep dips that you got to be prepared for. And, if we do go there, I do have some dry powder available for that. And even though it's a low probability thing, I think it's important to have some reserves or dry powder, whatever you want to call it, to make sure that you can take advantage of those opportunities when they occur. Now, if you're already all in, then you've got to you've got to consider whether you want to just ride it out or whether you want to maybe scale out some of your less desirable entries, take a little bit of a loss to be able to go back in and reinvest and buy more at a better cost. I'm dollar cost averaging my position. I've made that very clear. I'm using MTF, our MTF mean reversion indicator. As you can see, this is really just since yesterday. I turned this thing on, this setup on. I've been using this for years, but I turned this setup on yesterday. This is a pretty low volatility setup, actually, at just a 1% deviation. And I do, I run deeper deviations, but it gets complex if I start showing you everything. Here you can see here's a 2% deviation. So it took one signal at 2% versus, about 15 at a 1% deviation. So you set that up however you want to trade it. For me, I do, smaller entries at these lower deviations, and I scale up, into bigger ones. Right. So, so far nothing getting hit deeper than that in a while. So that's basically how I'm approaching it. If you're interested in any of these tools, by the way, you can check them out at materialindicators.com. Got a flash sale going on right now. Use code FC20 for 20% off. That will be in the description. By the way, descriptions are always written on the YouTube version. Takes me a little time to get them pasted into the X versions once they post. Waka's asking, do I believe the Grayscale has some more quantity or possibly to dump? Yes, they have more quantity. As at the BTC ETF time, they exchange hands, they dump BTC. Yeah, so they did. We talked about that kind of at the beginning, and let me explain again. I'll go back to that chart here. So here's what Grayscale is doing so far, or what they've done to set this up. So they had this ETH trust. Its symbol is ETHE. They've had this ETH trust for a long time. I think close to a decade. I want to say like 2015-ish, something like that, maybe. Whatever the case, they've had it for a long time. It was a $1 billion fund. What they did when they launched this ETH mini, symbol ETH, and a low fee, this low fee offering was kind of to try and slow the bleeding. They lost like 18 billion assets under management to date on the Bitcoin trust, right? And so they had not had an offering like this on the Bitcoin side. I think they're developing one now parallel to this. But so the idea of this was to try and keep more assets under management under their roof. Okay. It was okay that they, what they shed here on the ETH trust side, at the end of the day, is generating some revenue for them. Potentially they'd like to keep all of those assets under management because they keep all of that revenue year round and it continues to generate revenue. But nonetheless, this was developed to try and slow that bleeding. I expect to see more rotating out of this larger fund because of this massive management fee. But like with all things, that will eventually taper off. And so if we are going to see something similar to what we saw on the Bitcoin side, that was about a 2-week time span until things normalized a bit and we started to see the uptick. So, everybody wants to buy as low as they can. They want to sell as high as they can. So if that's, initially on the Bitcoin side, there was so much pent up demand that they were just buying. And we saw that 88% run, right? Now we probably in the past 2 months or so, that normalized to where it wasn't just buy. They started trading along with the market much more efficiently, I think. And so they've already learned that lesson. They don't have to learn it again. So I don't think this is just going to be a free for all of buying from the other entities like it was initially on the Bitcoin side. I think we're going to see things trade relative to the market after this initial kind of euphoria is over with, and then this is somewhat speculative, obviously, but we could be seeing some rotation from Bitcoin into ETH just for those TradFi guys who want some diversification. They got a taste of crypto exposure. They love the 88% run, and in less than a year. And so they're saying to themselves, hey, probably good idea to diversify. And ETH actually has more upside potential than Bitcoin does. So either they're going to be adding to their position and to their portfolios by buying some ETH, or they might be rebalancing and rotating some funds out of Bitcoin into the ETH offering. And of course, DeFi degens are going to do it with the with spot products so that they can stake, etc. So what's the other question? If this rotational is done open market, then we might see some sell pressure. Your thoughts? Yeah. So we're seeing sell pressure now, and we also have Mount Gox sell pressure happening as well. So far, I think about 40% of that Mount Gox coin has been distributed over the past few weeks or several weeks, and I think the Bitcoin did a good job of absorbing most of that pretty well. So we know that Bitstamp is starting their distributions around now or very soon if they haven't already. And so we're going to see this continue to trickle out. So it might take some time, right? My expectation, and again, this is speculative. I'm not an expert on ETFs and I'm not an expert on on institutional trading, but my expectation is that we'll see more of this continue through the end of the month, volatility through the end of the month, potentially a rebalancing on the first of the month when those folks who have some Bitcoin ETF positions want to rebalance to make sure that they've got some ETH in their portfolios as well. So that's kind of what I'm thinking could happen, and then we should see things start to normalize. At least that's my expectation. Hey Enzo, good to see you too, man. I appreciate you coming back in and joining me, as I do each and every one of you. If there's no more questions, I think I'm going to wrap it right there. Well, did we look at fire charts? Just real quick, we'll take a peek and see what's happening here. Actually, I saw this breakdown happening last night, right? When this ladder of bids disappeared, we had a ladder take off, it disappeared, and we saw price breaking down along that. The fact that we're seeing a bit of a recovery right now is good, but here's what we're not seeing. We're not seeing good whale volume at the moment. In fact, whales are still distributing in this range. So I want to see these purple whales turn things around. It looks like they came off the bottom a little bit. Let's move into the daily and see if this is indeed it, and they're just doing it incrementally right now. We'll see. We got to clear this 65K, and that gives you an easy shot back to 67 if that can happen. Let's look at the ETH chart real quick and see if there's any liquidity in range to support where we are. Yeah, pretty close actually, as you can see, kind of pinned into a tight spot right here. Let's see here. Heavy resistance overhead. Support down here at the 3100 level, and that's we're trading just above that at this point. So if we get a little bit lower, there is some secondary support down here. Oop, didn't mean to do that. There is some secondary support down here, but you really would like to see things hold and start to recover for ETH, because they sure did give up a lot of ground here. A lot of really important levels were lost here in the past 2 days. So, straight lines, I say frequently, straight lines aren't sustainable. Look at this big thing, and then boom, it comes back down and retraces, and that goes in both directions, right? So here we go, big dump down, you reclaim it. So the fact that this is happening fast might be a good sign. I'd be okay if we went down here and retested this. As long as it held, that would be a strong place to recover from. So we'll see what happens. Don't be in a rush. Resist the urge to overtrade. Pick your targets and look for volume to come in before you get too aggressive. Scaling your way in and scaling your way out is always a good idea, in my opinion. But that's my opinion. That's what works for me. You got to do what works for you. Gonna wrap it right there, guys. As always, have a fantastic day and trade safe, my friends. Thanks, Wakasa. I appreciate those kind words.